From Barangaroo Studios, the ausbiz COB is the key stuff you need to know about the day in business and finance.
Well, hello. Wonderful to be here with you. And you, Juliet Sally.
You too, Nadine Blaney, on a day when, of course, we had the jobs report coming through. Is that likely to increase the chance of a rate hike from the RBA next month? And, of course, yesterday we hit those records, but no surprise after that tumble on Wall Street.
Yeah.
We saw a little bit of a weak spot on our market too.
You could say the echo was felt right around the world, I suppose, when it came to some of those tech names in particular. We'll get to some of our sectors in just a bit. But yeah, to your point, down day on the market. The COB Australia Index has closed down by 0.5%. Look, the S&P ASX 200 is doing a little bit better than that now. We'll see if that holds while the last of the day's trades go through. But we're still up on the week. I'm gonna stick with my positive outlook on life.
Yeah, I mean, the fact that we're still above 8,000 as well on the ASX 200 is encouraging. So we only lost around 24 points today on a day when they were suggesting, the futures were suggesting we could lose about 0.6%. So we lost about half that. Let's talk about the key trading themes that we were really seeing though, because it was about that tech tumble on Wall Street overnight. We don't have the same tech exposure, but you did see a big pullback in the likes of Wisetech, Xero, NXT as well today. NextDC down by about 5%.
Yeah, they were big falls. I think that what this is telling us though as investors, and we'll continue to explore this on ausbiz, of course, is what is the big risk when it comes to Donald Trump and a presidency 2.0, and that really comes down to China. It comes down to trade. And so that is sort of what we're seeing. Like this might be just sort of the beginning of volatility, is particularly when it comes to things related to China. And I was reading Chris Weston from Pepperstone's note this morning, and he reminded me that volatility begets volatility. And I just had a chat with Jamie Green, who's the chair of primary markets. So that'll be up online shortly if you'd like to take a listen. And he just kind of listed all of the risks out there, what it means for volatility. But again, volatility brings opportunity.
Exactly. Well, potentially opportunity if you want to go really long some of these companies that are coming through with the downgrades. Domino's today saying that it is going to be shutting down some of its global stores in particular, pretty flat store growth that it's expecting, but still has plans for more than 7,000 global stores in the 2030s. But a kind of interesting theme because you're starting to hear job cuts. Fortescue yesterday, Accent as well, closing down stores. So just that overall view of the economy, which leads us to what we saw with jobs and how that all plays into the RBA.
Yeah, I had a good chat with Bjorn Jarvis, who is the chief statistician, you could say, at the ABS. And what he said was, and I thought this was good, at 11:30, he didn't think that board members from the RBA would have been spitting out their coffee. I mean, it is a continuation of a theme that we have been seeing. But the jobs market is strong. Whether or not that means that the RBA will be able to thread that needle, of bringing inflation down without, sparking mass unemployment remains to be seen. But it's really touch and go when it comes to that August meeting, I think was the consensus of the people that we spoke with. And again, Phil O'Donoghue's up on the website if you'd like to take a listen from Deutsche Bank with his view. He's expecting, I think he's in the hike camp.
Well, so I was looking at money market pricing. So 20% chance now of a hike in August and only an 8% chance of a cut by the end of the year. So that moved lower from 14% prior to the jobs report.
Yeah, and I think that your point about Accent Group, yes, it's shutting down underperforming stores. It was the stock of the day, so I don't want to get too far into it. But it said that sales in the second half were better. So sales improved in the second half. That means we're still spending. RBA does not want us to be out there spending.
Yeah. All right. Well, no one spent on tech stocks today. Let's have a quick look at how they fared. Wisetech down almost 7%. NextDC, as I mentioned, down 4.5%.
Still not seeing anything coming from the plenum, the China's third plenum. So we'll be releasing a communique today from that meeting. Look, when it comes to the big miners, iron ore has been coming under pressure. I'm just seeing in London, Citigroup has cut the target price on BHP to £25 from 26. That's in the wake of its production report that came out yesterday.
Having a look at the banks, I mean, CBA was still hitting records today. It's come off that 132, but it was around 133 at lunchtime. So people still buying the banks. A 1% drop from CBA when it's at those levels, probably no surprise, really.
Westpac going its own way, just mildly positive, so outperforming the broader market. I mentioned BHP's production report. It is production report season, ahead of earnings season. And we heard from Evolution Mining today, a rise in June quarter production.
Santos posted a 6% drop in revenue for the second quarter. Meanwhile, its shares down a third of 1%.
Telix Pharmaceuticals, interesting to see that its share price has dropped 2% after lifting its sales guidance for FY24. And I'll just sneak in Dusk. It came out, which it looked to me like it was a profit warning. It was. And last I checked, its shares were up more than 20%. So I'm going to go back and reread that and see what's going on there.
Domino's, we talked about that, warning it will close stores in France and Japan. Shares down 8.4%. And Accent, of course, closing stores, which often means that they're trying to, of course, trim some of their losses, sending shares in, or shares higher, I should say.
Look, it was a stock of the day, as I mentioned, Mark Gardner from NPC Markets, and a new guest on the call today, Zach Riaz from Banyan Tree. They weighed in on Accent Group. Here's what they had to say.
Been taking advantage of the price spike to probably get out of some. I think there's better retailers around. If you're going to roll the dice with the consumer, I'd probably rather be in something like Lovisa or say West Farmers, but possibly not West Farmers at these prices at the moment. But just on the back of obviously they've got discount brands like Kmart, etc. Now this one particularly, they've got a really good range of products. They've got the wholesale, as was covered.
Still very cautious. Post the recent spike in share price, trading on 15 times blended forward. Retailers, 12 to 15 times is normally pretty good. I think that's normally full, but gives you a nice yield of 6%. I think there will naturally be a ceiling for these kind of stocks because we remain cautious of the consumer. But overall, I think the store rollout, and they're making decisive decisions around, closing underperforming assets.
So you can listen to that entire episode of the call. There were a couple double buys in there.
Yeah. All right, let's get to our guest of the day on the COB, Jimmy Jang from Macro Capital. Good to see you, Jimmy. I mean, are you sort of surprised that we're seeing a little bit trimmed off the top, given that we have been hitting these records?
Of course. I mean, we obviously can't, rule out the unemployment rate that came out today, largely in line with the expectation. But the number of jobs that was added to the economy was just about close to 20,000 more people than they expected, was something that we need to be really wary of. But probably one thing that, I think was mentioned, that with the volatility, there's opportunity. There's a lot of opportunities that's in the market right now, especially in probably the small cap side. So over in the US and the global market, with the potential rate cut that we might potentially see later this year, the small cap Russell 2000 index has actually rocketed to about 12% in the past 5 sessions alone, probably the most since April 2023. So what we're probably looking at is another ETF exposure like VISM, could be something that we can add it, but we're closely kind of monitoring to kind of make sure that we're not over allocating in a particular sector at the moment.
Okay, so over allocating is a no-no. How diversified are you? Like, is there any reason to be holding cash? Many people tell me that they are fully invested still.
Yes, of course. Cash exposure is really important right now, especially with that news coming along. With if Donald Trump wins the U.S. presidential election, his plans for that 60% tariffs on the Chinese good could be a really major downside growth risk that would be added to China. So increasing your cash exposure is very, very imperative in this current moment. And some of these defensive stock that I mentioned earlier, like Woolies and also Cleaner Waste Management, is probably one of our 2 picks in the industrial and the consumer staples to kind of make sure we got the defensive exposure. But we also don't want to just kind of take a bet on what the RBA will do in the next month. No one really kind of knows that until it actually occurs. So we also just want to make sure we have some allocation in, like, let's say, consumer discretionary sector that has been hit hard over the last couple of years. You're probably good to kind of allocate in that area as well.
So let's talk about some stock specifics then, because we've been talking about what's happening in retail in the likes of the warning from Domino's, from Accent. Super Retail Group, though, you're adding.
Yeah, Super Retail Group is something that we've been that was on our watch list for quite some time now, and we're now kind of started to get really comfortable in allocating. So we've started to allocate into Super Retail Group probably end of last year. One of the large reasons why we like it is also the dividend. So it's close to about 5.5% yield at the moment that it's proposing at this level. But most importantly, the diversity of the brand portfolio that Super Retail Group owns is something that we had a really good look at. So like Supership Auto, Rebel, BCF, and Macpac obviously each operates in a very high involvement life cycle category such as auto, sport, and outdoor leisure. So these sectors have shown resilience and growth potential even in those fluctuating economic conditions as well. But as you guys all know, I'm a very sales-driven guy. So positive sales performance is also something that I really love from the Super Retail Group. They've really demonstrated that impressive sales performance in their last trading update on May. On the 8th, they also reported that 1% increase in group sales for March and April compared to the previous period. So also on top of that, the strategic expansion that they're proposing for this financial year or the last financial year, they opened 20 new stores while closing 4, showing a strategic approach to growth. And also they plan to open 7 more stores before the fiscal year ends on June 29, indicating they're really confident in the market demand. So really like the name, we're comfortable, and it's been up for about 4% since the allocation. So we're happy days for us.
Yeah, okay, that's interesting. So Super Retail, not shying away from all of those retail names. I had a chat with a guest earlier today who said that watch JB Hi-Fi, because if Apple starts to go through its AI phase, its AI era, let's call it that for all the Swifties out there, and then people need to upgrade, that JB Hi-Fi could be one to watch. Have you put much thought into that, Jimmy?
Yeah, no, funny you mentioned that because I was actually watching that as I was, preparing for today as well. I largely agree with the JB Hi-Fi allocation along with this tech boom that we're seeing. But at the same time, we always just want to make sure that how exposed is JB Hi-Fi to these names like Apple with their or cornerstone retail shop for these type of products. Probably one thing I probably focus on, especially from macro's perspective as well, is that if, for example, Apple's new product that's coming out in the outlook is looking positive, then it's probably a good time to start looking at it. But from our perspective, JB Hi-Fi has always been an allocation from our portfolio. We're probably a little bit more focused on the fundamental, like Super Retail Group, that has those typical boring companies like that. It's so focused on the fundamental for these consumers rather than just getting driven by these new hot products that's being introduced to the market. So from our perspective, probably not a good allocation.
Interesting.
When you talk about super boring, I've had a lot of chats about, not that we should call it this, but just that whole gold safe haven bet, and gold continue to hit these records. I mean, Evolution out again with an update today. What are you sort of seeing, or do you like that space?
At the moment, gold has always been core focus or a safe haven for a lot of investors in the market. But from our perspective, there's so much more better asset classes that we can allocate with the same sentiment. So I'm probably a preacher from our firm about private credit as being the good exposure to have to offset these type of volatility that the market is offering. Getting let's say 10 to 17% between first and second mortgage that's largely asset backed. With the very little risk with the actual LVR that we're proposing for our investors. There's nothing that can really beat that from our end for that safe haven area other than private credit. So from our end, probably not a good allocation at this current moment, especially where the gold price is sitting at right now. So probably private credit is what we prefer in this current market.
Jimmy, you getting ready for reporting season? What are you expecting? I know it's a big question, but just, give us your take so far.
Of course, an earnings report coming up, it's always an exciting and a daunting time for all the investors out there. We have a lot on our watch list right now, both in the technical and the fundamental sides to kind of ensure that we take advantage of it. Probably one of the companies we're looking at right now is the industrial focus. So, for example, companies like James Hardie, Boral, these type of industrial construction materials companies, probably what we're focusing on, just because of their input prices have really gone down over the last 2 years since COVID. So if they can continuously perform what they have been doing over the last 2 quarters, we're probably looking to have some really good result with them as well. And another names like Ordinate, obviously a good name to have in the portfolio that we've been having so far, probably something that we like to potentially increase our exposure as we're approaching the earnings report. But at the moment, exciting times, but probably we're very wary with the market volatility that we might be seeing in Australia, especially with the election coming up in the US as well. So being cautious, but at the same time allocating heavily if we like it.
All right, Jimmy, always a pleasure. Have a good rest of your day and weekend when we get there, Jimmy Jan. time from macro.
You're already thinking about Friday. I don't blame you. Let's take a look at some of the leaders on this market today. Fletcher Building, again, it's just a slow creep up after being really heavily sold down on Monday. Liontown Resources up by 3%. Juliet. Ensel 2.74%. There's your evolution in the glistening gold space or boring gold space. And Aurora, no news associated, I can see.
All right, having a look at the losers today. We saw Domino's, of course, we've touched on that. A switch out of tech as well. Still some weakness coming through in some of those uranium players as well. Deep Yellow off 5.5%.
NextDC, I wonder who saw today in tech buying opportunity. With some of those steep falls there. In the small to mid cap part of the market, Quantum Graphite up by 15%, BrainChip 8.8%, flipping the page though to see what was weighing on this market, and Core Lithium's down by about 9%.
All right, let's have a look at what is happening overnight. We've got those weekly unemployment claims in the US. Also, the ECB decision. Now, I had a good chat with Stephen Miller from GSFM. No change expected given they cut in June, but of course they will be continuing to monitor economic data there as well. And a big number of earnings. I mean, TSMC is in Taiwan. I believe that might be out already, or out at least in an hour or so. And Netflix, of course, is a big one.
Don't forget about the ECB. It's expected to remain on hold at today's policy meeting, so 3.75%. It did cut last time it met. That was the first of the cycle. Expecting the message to be, easing will continue to sort of a measured pace, given all of the unknowns out there right now.
Yeah, and actually I think TSMC is just hitting the wire now. This was just a memory from my days covering this stock that it comes out around this time. Profits surpassing estimates after AI investment surges. They're expecting their business to be supported by strong smartphone and AI-related demand. Having a look at what we will expect tomorrow, Beach Petroleum, Newmont, Whitehaven Coal giving an earnings update. Japan National Core June CPI out, and then tomorrow night, our time, we'll have a couple of speakers, Logan and Bowman speaking.
Yeah, we've got a lot of those Fed speakers. Interesting, Mark Gardner from MCC Markets today was saying, we're always fed the quotes on rates, that rates could be coming down this year. And he said, if you read the whole communiques or the whole speech, he said, often they're taken out of context, that they're more hesitant when it comes to the U.S. economy than might seem at first blush. So I'm going to make that a habit to read a couple of these speeches in their entirety.
Okay.
Fun times.
You can then tell me what they're about.
I'm a fun person, aren't I?
You're super fun. All right, we're going to leave you and love you, as we say it, and we'll be back with all the fun tomorrow.